After a turbulent start to the year, Metro Vancouver's real estate market is starting to show early signs of recovery. The numbers for June tell a story of a shifting momentum and possibly a turning point. I'm Kelly Fry, and this is your June 2025 market update from Metro Vancouver. Let's begin with sales. Last month, we saw 2,181 homes change hands across Metro Vancouver. That's a 9.8% drop from June of 2024 and still 25.8% below the 10-year seasonal average. But here's what's interesting. That drop is only half the size of May's year-over-year decline. So while demand is still soft, the slide is slowing, and that's a good sign. According to Andrew Liss, Director of Economics at GVR, if this trend continues, we could see year-over-year sales growth return, something we haven't had much of so far in 2025. Now let's talk about inventory, because buyers are definitely getting more options. In June, we had 6,315 newly listed homes, a 10.3% increase over June of last year, and a 12.7% increase on the 10-year seasonal average. That brings total active listings to 17,561 homes on MLS, a massive 23.8% increase year over year and a 43% increase on the 10-year average. This kind of selection hasn't been seen in years. So if you're in the market to buy, you've got choices and less competition. Of course, more listings and steady to soft sales keeps the market balanced. In June, the overall sales to active ratio was 12.8%, right on the edge between a balanced and buyer's market. And when we break it down by property type, detached homes are sitting at 9.9% sales to active ratio, which leans towards a buyer's market. But townhomes are at 16.9% and condos are at 13.9%, both falling within the range of a balanced market. The middle ground is part of why home prices have remained mostly stable. The composite benchmark price for all home types in Metro Vancouver now sits at $1,173,100, and that's a 2.8% drop compared to June of 2024, but just down 0.3% from May. By home type, detached homes saw 657 sales in June, with a benchmark price of $1,994,500, which is down 3.2% year over year and 0.1% from May. Apartments led the way in volume with 1,040 sales and a benchmark price of $748,400, reflecting a 3.2% drop year over year and a 1.2% decline from May. Meanwhile, attached homes, townhouses, recorded 473 sales with a benchmark price of $1,103,900, down 3% year over year and 0.3% from May. With sales stabilizing, prices holding steady, and interest rates about 2% lower than last summer, many buyers are finding this to be the most favorable buying environment we've had in a while. We've got balanced conditions, motivated sellers, and inventory levels that actually give buyers room to think, act, and negotiate. So what does it all mean? If you're a buyer, you've got a window of opportunity, especially if rates continue to trend down or hold steady. And if you're a seller, the key is to pricing your home accurately and making sure it stands out in a growing pool of options. And if you're an investor or an upsizer, this calmer market could offer you some strategic moves without having the pressure of peak pricing or bidding wars. Bottom line, Metro Vancouver's market is stabilizing. We may be on the edge of a rebound, but right now it's a great time to make a move with confidence and clarity. If you're thinking about buying, selling, or just trying to understand how all of this applies to your specific situation, let's connect.